the first question is, what do you want your money to do for you?
Mm-hmm.
That's the key goal. Like if it's for retirement, especially for you and I, we still have years, actually not years, we have decades before retirement.
Mm-hmm.
So we cannot, we have to let that money have time.
Welcome to the Fearless Living Podcast.
Hello and welcome to the Fearless Living Podcast. I'm Annie Temple, your host, and today I'm extremely excited about my guest. This guest is my money gal, I call her. She helps me with my investments by taking me by the hand and showing me what was available and how I could kind of traverse the course. And I thought she'd be an amazing guest to have on our show today so that she could give some advice to other people about money. My guest is Beth Merk. Thank you for being here.
Thank you for having me.
And can you please just tell us a little bit about yourself before we get right into it?
It sure do. It sure will. Um, Actually, I immigrated to Canada 20 years ago, fell in love with my husband, and just the 30,000 miles between Michigan and Vancouver just was not going to work for us. So I moved out here, fell in love, got married, and at the time I was in food service. I was a food and beverage director, 21 years career path. But once I got married, I just discovered that that was not very conducive to married life and family life. So I said I needed to make a career change, and I didn't know quite what I was going to do. However, it was not going to entail any more student loans.
Hmm.
I just got $38,000 in my pocket from going for 6 years of university.
Mm-hmm.
So, not going to do that. And at the time, I was just looking for something that would fit into me and my wheelhouse. I love to teach. I love to teach about food. And we were already clients of our money guy. And I called him up. I said, "Hey, are you looking for somebody? Because I would like to make a career change." So I went from food service to financial services, and that was, believe it or not, 15 years ago.
Wow.
So I love what I do. I love the freedom that it's brought to us. I love that it's given me the flexibility to take care of the people in my life now.
Mm-hmm. So you're a money gal entrepreneur, really, because you work for yourself. Is that correct?
Yep, we're both, Bernie and I, my husband, are both licensed financial professionals, and we work for the for our clients.
Mm-hmm. That's awesome.
Yep.
It's very cool. So can you explain like what a money gal or financial advisor or someone in your position does for people?
Yep. If you hear financial advisor, you have to think of that as a broad title.
Okay.
Um, the key is, are they licensed, and are they like a licensed financial professional? And who are they working for? Because you can walk into any bank branch and make an appointment with the person that's sitting behind the desk and go and talk to a financial advisor, but you're actually going and talking to a bank employee.
Mm-hmm.
Um, and just from my experience, working, because I was a client first, from my experience, it's someone that asks me what I want my money to do for me
Mm-hmm.
and helps me create a game plan for that.
Yes.
And it's some in that those that plan is something that they're not going to ask, that they haven't done before.
Mm-hmm.
So because we work together, you have some of your money where I have some of my money.
Mm-hmm.
And that's really what sets the difference out. And the key question when your listeners or going and starting that on that path, the key question is, who's that person working for?
Mm-hmm. Yeah. And I love how you put that. It's about what do you want your money to do for you? And that is so exactly what you have been teaching me how to how to make my money work for me and pay myself first, which is such an important concept, but I never really understood it until I started to know how to pay myself first. How can I make sure that the money that I'm paying myself with is going to benefit me for the future? And that's been a really wonderful benefit of having you in my life. So I already know the answer to this question, but I'm going to ask it anyway because I know that it was a question that was on my mind for years and years and years, and it prevented me from reaching out to someone like you. And the question is, how can you help someone who has very limited funds?
It's about that. And I think I helped you with that thinking of being deserving, as well as if there's anything that the government can step in and help you out with to free up some funds so you can take that next step. And really, it's back to that whole mindset, deserving. And you said it right away, setting yourself up as a priority.
Mhm.
A lot of people that I've noticed today will set up protection plans on their cell phones, but do they set themselves as a priority and set up protection on themselves,
Mhm.
meaning if something happened to them, or retirement?
Mhm. Very true. That is so true. So what you're saying is somebody who doesn't have like a lot of money or a high income can still benefit from your services?
Mhm. And it's to get proper money management. It's $50 a month.
Mhm.
And that opens up the whole gamut, because I was in the same position as you, Annie. When I first started, I didn't understand the rules to the money game. I was working and living in Canada. I didn't even know what an RSP was.
Hmm.
My husband was a Canadian, well, he is a Canadian citizen, and he didn't even explain it to me. It wasn't until our money guy sat down with us and explained that you contribute into your retirement savings and you get a tax deduction. Mind blowing,
Hmm.
because in the US, they don't have programs necessarily like that.
Wow. I didn't know
Yeah.
that. It's funny how I just assumed that they're a lot like Canada. But,
Yeah. So there are some tax advantage programs down there. And so by just me learning the rules and wanting to teach and share that knowledge so people can get ahead,
mhm,
because it's not being taught in school.
that's for sure.
And I learned my money management from my parents. And it was basically my mom pulling out this huge ledger. She looked like she worked for a corporation, but it was a family of four. And she was making sure that the money lasted until the end of the month and
Hmm.
that the necessities got paid. And then I also learned like scarcity in the summertime because my dad was a teacher.
Hmm.
But hey, those summertime grocery shopping trips was really different because we used up all the free coupons in
Hmm.
the summertime. So we were eating really different food in the summertime because my dad was a couponer.
Wow, that's fascinating.
So children learn from their parents on the tendency.
Hmm.
So as an adult, we need to start working with that next generation too.
So what would you say that those financial lessons as a child, like how did that impact you as an adult?
Well, I also didn't have those lessons. I went into university as a 19-year-old with two credit cards because they had the applications and the textbooks. And my parents didn't have credit cards. So I didn't have the the knowledge on how to use credit cards appropriately.
Mhm.
And then I was also saying, hey, here's your student loan debt, go to school and start off your young adult career path with $38,000 of student loan debt.
I know, I did it too.
And and to be honest with you, Annie, since I was 14 years old, I wanted to own and operate my own restaurant.
Mhm.
But I left university and culinary school with $38,000 of student loan debt. I'm not going to be able to open a restaurant. So I
Mhm.
became an employee. And that's exactly how the system's set up to be.
Yes, I agree with you. Create employees.
Yep. And I was for a long time, I was a happy middle management employee. It wasn't until I got a different place in my life and I became an unhappy middle management employee.
Mhm. So, what kinds of things should people take into consideration when they want to start investing their money in, a plan for the future of some kind, or like what would you want to talk to? What kind of questions would you ask someone if they phoned you and you needed to find out what their plan is, or what they need to do, or what their goals are?
The first question is, what do you want your money to do for you?
Hmm.
That's the key goal. Like if it's for retirement, especially for you and I, we still have years, actually not years, we have decades before retirement.
Hmm.
So we cannot, we have to let that money have time to do its job.
Hmm.
And then the next question is, how often do you watch the news or listen to like market reports? And how jittery do you get? Because we're not going to look at strategies that will make you lose sleep at night or put your mind at ease. But that's part of me and in our service that we provide is that I'm here 24/7.
Hmm.
And most people know when I'm going on vacation because it's on Facebook and I don't hide, like I don't hide from people because
Hmm.
it's more friendship and guidance.
Hmm. Yeah, I definitely get that feeling from you that you actually care about helping me achieve my financial goals, which I love about you. um, what are the steps that you would take someone through to prepare for retirement, since we were just talking about that?
Well, and this is exactly how Bernie and I started with like being our path of client. How much money do you think you'll need each month coming in to have the retirement that you want to live?
Mhm.
And my dreaming got a little expanded because I was working resort retirement living at the time. And I kind of did the math. I could live on a cruise ship for a year as the same amount as those people were paying to live in a suite and come down and have 2 meals a day with me.
Mhm.
So I was like, cruise ship. Um, and then, so how much money do you need to live the lifestyle that you want to live in retirement? Because
Mhm.
it's like a fingerprint. Everybody has a different thought on that. And
Interesting.
then the next question is, how long are you going to need it?
Mhm.
Like, if you're going to retire early, obviously you're going to need quite a couple of decades of retirement income. If you're going to say, hey, I'm going to retire at 71, then you might need a little bit less.
Mhm.
And then the key thing is figuring in inflation
Mhm.
because I'm learning from my mom who's 77 years old. I don't think their money guy, which they did have a money guy when I was growing up, figured in any inflation. Because
Mhm.
now my mom is kind of confused with things getting more expensive than the stuff she planned for from 30 years ago.
Mhm. Yeah, that's smart. But what would you say for people who say, this sounds like impossible? Like, I don't know how I could possibly save up enough money for my retirement. And they just don't understand, or, they just think there's just no way I could do it. Like, it's not possible. So I give up already before I even try.
Well, and that goes back to me having to say, hey, you deserve you deserve money coming in so you're not sweating it. It may be, let's start off on a plan. Let's start off on your plan. Let's start putting money away. Let's setting you as a priority. And then if when things change or down the and you get to retirement, you have some money instead of no money.
Mm-hmm.
Because this is Bernie and I's plan showed that we were going to be debt free because I was so focused. Like, I'm getting rid of this $38,000 of student loan debt before I'm 40. That was like, hey. But then Bernie also said, hey, I would like to retire early. Ooh. So we had to create a plan. We had to get on our plan and start putting money away. We had to put money, like get a lump sum in and put money away each month. So we're hitting our goals.
Mm-hmm.
And we were able to retire Bernie early.
Wow.
And yeah, right now, I don't have the annual income to live on a cruise ship, but we're still putting money away
Mm-hmm.
to hopefully reach that goal because I have years to come. And that's the beauty of being able to work from anywhere.
And it's also like the compounding effect, right? I think you explained that to me at the beginning. Could you explain that a little bit?
Yep, the earlier you start, the more time that you have for your money to grow. So, and it just compounds over time because your money will get a little bit of interest or growth, and then your money and the growth will get more growth, and it just keeps growing. But you have to start with something.
Mm-hmm.
And even if it's $50 a paycheck, that's something.
Mm-hmm.
And I always say something is better than nothing.
Yes.
And being solely like, if you have nothing in going into retirement, what's your plan? Like, are you going to work until they pat you on the head with a shovel?
Mm-hmm.
Or are you going to be fearful that there's no budget cuts and when they say, oh, the federal budget's coming out?
Yeah.
And are they going to cut anything? Or are they going to, or better yet, are they going to announce something that you're looking forward to, but it might not come for like 3 years down the road?
Mm-hmm. Sure. Can you talk a little bit about how you help people with disabilities?
That's a passion project for me. And I think you know that, Annie.
Mm-hmm.
The key question is getting to know people. And there's a program out there called the Disability Tax Credit. And like, I know about it. Like, I know where to find the forms and say, hey, send them, fill in part A and take it to your doctor and have them fill in part B. But that's the key thing, that disability tax credit, I don't think is talked enough.
Mm.
And when you get to know people and know what counts, and it's just about knowing people and saying, hey, I think you can qualify for the disability tax credit. And by checking that box saying, hey, redo my taxes, that frees up a lot of people. That can free up a lot of people's money.
Mm-hmm.
Like, kind of, I call it comma checks, like a number or two numbers, and then a comma and then three numbers after that, where your taxes are redone because somebody should have talked to you about the disability tax credit.
Mm-hmm.
And then where that comes into play also is the registered disability savings plan.
Mm-hmm.
And I like, that's also something that isn't, you don't see it like commercials. Like, I really think like the government should start some commercials
Mm-hmm.
about it. But that's just my thought. So I'll be the billboard and I'll be walking. And the registered disability savings plan, once you qualify for that disability tax credit, is a very generous savings plan.
Mm-hmm.
And why the government has established that is that people that qualify for that DTC, the disability tax credit, will typically have more expenses going into their senior years, and things will get more expensive, or homes need to be adapted.
Mm-hmm.
It's just, and I feel that that's a very generous program, and it can, anybody can range from it qualified for to the age 49,
Mm-hmm.
and that they can match up to 300%
Wow.
of a contribution. So that's why I'll be the walking billboard.
Mm-hmm. Yeah, I'll just add that you helped me. Years ago, I was really discouraged from trying to get the disability tax credit by some other advocate that I talked to. And they basically convinced me that I wouldn't be eligible for it. And then when I met you and started asking you questions and talking to you, you suggested that I give it a try. Why not? And on my first try, and this doesn't usually happen, usually people have to like try again and they get turned down and they have to try again. And I know that from applying for disability in the first place. But in my case, with my health issues and my condition, I was able to get approved immediately on my first application. And so I was given a substantial grant from the government to put into my disability tax savings or registered, what is it called again?
Registered disability savings plan,
Yeah,
RDS.
yeah, yeah. And then I also contributed until the end of my 49th year so that I could try to get some of my contributions matched as well. And so that put me in a instantly much better financial position than I was in before. And like I said at the beginning, I went from zero investment at the beginning of the year to almost 20,000 by the end of the year. So that was pretty amazing, I thought. So that was
and
my story with the disability thing.
and and I don't use your name, but I share that often. And there's people often out there that don't think they'll qualify for it, and
Mhm,
a lot of it's the stigma with the disability in there.
mhm,
I think it should be called the ability tax credit, but because people get that negativity around disability, and you're not the first person that has been told that they wouldn't qualify for it.
mhm.
Like,
I think also like it's scary to like be vulnerable enough to walk into your doctor and or ask the government to acknowledge your disability. It's scary. You don't know how they're going to respond to you, react to you, treat you. It's a very vulnerable feeling, and it's around money too. So yeah, I think that there's like a psychological block almost that makes it hard for people to go there, but I'm so glad I did.
and then you have me as your advocate saying, hey, it's very positive. After you get over the speed bump in your mind, it's a very positive afterwards,
Mhm.
and the benefits afterwards, like, and it can be anywhere from hearing impairment, visual, um like neurological, so on the autism spectrum, to mobility, to anything like health related.
Yeah, that's
and
awesome.
and so, even if you like, and there are stats out there that there are hundreds of thousands of Canadians that would actually qualify for this program,
Mhm.
that they just don't apply for.
Yes, I was one of
And
them.
yeah, until you had Beth and Bernie saying, hey, Annie,
Yeah.
just go and pay your doctor 100, and I don't know what the doctor charge you for the filling out the form
Mine
fee.
doesn't charge me. I'm lucky I have a really awesome doctor.
Some doctor, but even if you had to pay $150 for
It would
your
have been
doctor,
worth it.
it would be worth it.
I would have done it. What do you think is the biggest mistake that people make with money?
Oh, and I made it. credit card debt
Yeah.
or revolving debt, anything that doesn't have a done date, like your mortgage. Well, mortgages are supposed to have a done date, but they renew every 5 years. So it's kind of like, hey, it might, or like a car loan. I mean, but car loans, we don't need to get onto that. That could be a whole nother like podcast. Beth, can you come back and talk about that? But credit card, lines of credit, home equity lines of credit, that's kind of, that's kind of putting like the handcuffs on you and throwing away the key when you're tying something to your mortgage. But it's just that revolving. And I get it. Things are more expensive. Like I was just looking at a grocery bill. Our weekly groceries were about like $80 a week. Now they're sitting about 120.
I know, it's
I
crazy.
get it. And income has not gone up as much as groceries, just like your living stuff.
Yeah.
And so that credit card, like the debt. But one thing that can help people is if you give every single bit of money coming in a job, then that reliance on that credit card should decrease. So like I'm the grocery shopper, actually not the shopper, the app orderer. Like, oh, so I know how much money's coming in and how much money we need going, like I need into that account for our groceries.
To cover your bills every month instead of going deeper and deeper in debt.
Deeper and deeper in debt. And that's something that I've noticed the change in the last 20 years here in Canada. When I came into Canada, I wanted just a small credit card so I could book stuff offline instead of having to wait for Bernie to come home, because we were working different shifts. We were like ships passing in the night, like, and waiting for the credit card to come home so I could book something online. And I went to RBC because and I'm sorry if I went to the bank where my husband was banking, and I asked them for a small credit card, and they're like, oh, sorry, Mrs. Merk, you don't have any Canadian credit history. We can't give you the visa.
Yeah.
And I'm like, the US government says I'm on the hook for $38,000. I'm good. But they're like, you don't have enough Canadian credit history. Nowadays, you see signs outside of the bank, welcome newcomers.
Yeah.
Here's your credit card. Here's how you build Canadian credit history. And there's ways to not do that. There's accounts now that you don't have to, that you can build up your Canadian credit your Canadian credit history without having to take on credit cards, because most people don't know how to use credit cards appropriately.
Yes.
And I'm reformed. I'm reformed.
Yeah, I'm getting there.
Yep. And that's part of just learning those rules of the money games that we sat and had conversations in Starbucks with.
Totally. So I have not young children, I have young adult children. And a young child, but that one's not ready to start taking care of her own finances yet. But my two young adult children, what would your advice be to them in terms of like making a plan for their financial future?
And I'm back to giving your dollars a job. Like, no, I don't want people to stress out, like, oh my God, my grocery budget was whatever X amount of dollars. I'll just use Bernie and our grocery budget was $120, and I had to add on, oh my God, they were out of this, so I had to add on whatever else that was more expensive. So I don't want young people to start stressing out about, but in general, in a general rule, if you think about it, if somebody that was 25, like reached 25 years old and had $25,000 invested appropriately, not like grandma investing or to like not having a rate of return that's age appropriate. That's something that we talk about often. um if they had that, they should be pretty set for hitting over the $1 million mark if it's appropriately invested. And I say invested, not fund pickers.
Mm-hmm. So what's
um
the difference?
there's so much a difference. I have people, and you know this also because of the fund managers that we've talked about, that's their job. We're just investors and staying invested. And when the markets go down, you're buying things on sale. It's kind of like coffee. I just noticed coffee this last week was $8.97. Well, I remember when it was like $5.97. We're like, hey, but now $8.97. I'm like, hey, let's put two in the cart because it's on sale. Because the markets, and especially like the S&P 500, like all the money, like the markets when you're trading stuff on the markets, that's the only market people run when it goes down. But if you think about it, it's the same as housing markets. If the housing markets went down, people will be like, hey, I can get in and buy. And you want to sell when it's high. So my goal is to help people through through the ups and downs and be excited. Like I get excited. Like I'm like, hey, our money went in this month. And I don't look at it. I actually take my own advice. I don't look at our statements all the time.
I don't look at mine either. I just,
because I know money's going in. I don't need it right now. I'm not retiring. We're not pulling money out. So we'll just let it there do its job, what we intended it to do. So a rule of thumb for your younger listeners, if they can accumulate $25,000, and that kind of, like when I was younger, that would be like, whew, how do I do? But you also have to think there's less responsibilities.
And so how could a young person save up, say, $25,000 in 5 years? What would you suggest for them?
Starting a solid, putting money away first, like, and taking a look at their spending habits. When we started our game plan, and Bernie didn't even know this, I was literally flushing $200 a month down the toilet because I was buying Starbucks.
I know, I buy way too much Starbucks.
So Bernie, like Bernie had like the like what? So $200 a month putting away, paying myself first, and not drinking Starbucks. And actually, I became an investor of Starbucks because some of the funds that I own now own Starbucks.
That's cool.
And kind of like if you can't beat them, buy them. Kind of like the Loblaws business. People are boycotting. You still need groceries, and if you think of all that company owns, and you're like, oh, I'm gonna go to No Frills, owned. Oh, I'm gonna go to TNT, owned. It's kind of like a monopoly. There is a monopoly. If you can't beat them, buy them.
Yeah.
Find a fund manager that owns them in their portfolio. And buy them.
I like that.
And buy them. So if you have a young adult that's really into Apple, like they want the new iPad, whatever, that 5,000 that's coming out, and say, hey, does your iPad still work? is the key question, because we're all like, new car, new tech.
Mm-hmm.
Um, does it still work? And then say, hey, maybe the money that you're going to put in there, maybe invest and let it grow and have delayed gratification.
Mm-hmm.
Because it's not, that younger generation is so impressionable of putting their dollars to work, or needing to learn how to put their dollars to work. Because Gen Xers, you and I,
Mm-hmm.
we were kind of the latchkey kids. Like, hey, come home after school, maybe cook yourself up something.
Mm-hmm.
Um, we're kind of patched it together. So we need to teach that next generation how not necessarily to patch it together.
Yeah. Give them a little more
And
guidance than we had.
even you're younger, like 8, like start talking working money at 8. I don't know your views on allowance or whatnot, but allowance is great practice with money.
Mm-hmm.
Would you prefer them to practice on a couple of dollars, like a 5,
Mm-hmm.
or their career or their first job
Mm-hmm.
at like $17 an hour,
Yes.
$5 a week or a month versus when they get a job?
Yeah, that's great. Great.
And just have them start putting their money to work.
Mm-hmm.
Maybe 10% goes to giving, 50% goes to savings, and the rest 40%, there you go. And start teaching them some money lessons.
Yeah, that's a
and
great
a,
idea.
and a quick money lesson, that our youngest nephew, he was 7, wanted a Switch, Nintendo Switch. My brother and my sister-in-law were very, hey, you need to buy it yourself. That's above and beyond what mom and dad, you know, they tend to pay for experiences, not stuff.
Mm-hmm.
They view the Switch as a stuff.
Yeah.
Um, and he was all excited, had all his gift cards saved up, had his cash saved up, had it counted out. They went to the store. He went, had his money, and his mom, they had a big learning lesson on sales tax.
Mm.
So he was just looking at the price of the Switch less the sales tax.
Mm-hmm.
So they had a learning experience at the cash register because he didn't get the Switch that day.
Yeah, because he
He
didn't.
was he was $30 short
Oh, wow.
because of sales tax.
Mm-hmm.
So those are important lessons that kids need to learn. But I mean, I'm not a parent, so I don't know. I can't speak for you, Annie.
Mm-hmm. Mm-hmm.
But it's sometimes kids gotta learn
Mm-hmm.
those. And it's okay. You don't want your kids to be fearful of what's going on, with the family budgets,
Yes, that's true.
but you also want them to learn some strong money habits going into young adulthood. So you don't have to say, oh, I hope they learn it, because it's not being taught in school. I know some of the rules of the money game are being taught in school now,
Mm.
but learning to apply, because you can learn the rule, but applying the rule is totally different.
Mm-hmm. That's very true. And if it's all like kind of theory until you're doing it,
Yeah,
and
because
then then you understand. You don't really understand until you do it, though.
and I don't know about you, my money class in school, we learned how to write out paper checks.
That's what we learned. That's exactly what I remember learning.
Um,
And my
so
teacher had really bad breath. He'd always lean over to see if we were doing it right, and I'd be like,
I'm like, man, how do I spell 1,000? Or 100?
yeah, yeah.
So, but that stuff is out. I don't know the last time I've written a paper check for a long time, but it's stuff but I ask people for a void check and they kind of like, what's that? Um, so, um, so it's just about learning, and that's really where I step in and pride myself, and Bernie prides himself into just teaching what we learned,
Mhm.
how we've applied it, how's it affected us, and then how can we teach somebody to apply it in their life
Mhm.
and make stronger choices, because I didn't make any choices for you, right?
No, no, not at
Nope.
all. I made the choices, but you
You
showed me what the options were, which I
Yep.
appreciate.
It's about empowering, because
Mhm.
once you've empowered somebody to make those choices, then it becomes part of them
Mhm.
and ingrained in them. And then also empowering women,
Mhm.
um, because the financial services industry, like the advisors, tend to be men.
True.
And I don't know, I think you've learned this. Men and women talk a different language.
Mhm. And they don't always understand the same motivations. Like we often
Yep.
have different motivations for sure.
And
Well,
also
oh,
talking down,
yeah, that
like
can happen.
drives, drives me crazy. Like when I go to industry events and stuff like that, just to have, you know, just to say, hey, just talk different.
Yes, for sure.
We are smart. We are smart, empowered women.
So what do you say to someone who is reluctant to start investing their money because they are scared of the risk?
Mhm. And
Because
that's
like that's for instance when I've tried to talk my daughter into setting something up like what I'm doing. But her immediate thing is like, but isn't it risky?
mhm. And that's a great question. And like something like for your daughter, because she's in her 20s, right?
Mhm.
Some What's going to be risky for her is inflation.
Mm,
If her money's not keeping pace or outperforming inflation, that's risky for her.
okay.
And I don't want to say, hey, look back, like, oh my God, this has never happened. Like, how many times have we heard, oh my God, this has never happened to us? Or this has never happened. Like, you can look back in history, like, and just go back in history and look at what the markets have done, like the housing crisis, like when the housing markets went down because the banks were doing some, will not
Shady
go
shit.
will not go over. But oh my God, the markets have never dropped this much. And then a few years later, the markets dropped. And look at what the markets have done. But sometimes people still are looking in that rear view mirror and living in that rear view mirror. And I say, hey, when the markets go down, you need to be excited.
Mhm.
Like, like I look and I'm like, dang, the markets were kind of flat, but hey, I didn't have money going in this month or this week.
Mhm.
Um, and and I don't watch the markets all the time. I like to watch some of the commentary because it's sometimes flat. Like a couple of weeks ago, the markets were flat, and they're like, "Hey, it's like driving through Illinois," and that's my home state, and so I know how flat Illinois is, and
Yeah.
I'm like, "I know you know." Um, so and that's and that is like, if she would just start off with $50 a month and
Mhm.
then see, like, put it, make that a solid commitment, and then her look at her statement at the end of the year, or when we have our review, because that's something I'm big on, is,
Mm,
hey, you're going to hear from me at least one time a year.
yeah.
Like, I'm not running hiding when the markets are down. I tend to be the person that's saying, hey,
Mhm.
markets are down. And her opening her statement and saying, hey, wow. And then and that's about the learning, and really we're working together, like with her, is why is she fearful? where's she hearing this? Who's saying it? Because sometimes the people that are telling her that, or people that are telling other people that, oh, you should be afraid of the markets, might have an alternative motive.
True.
And I know this is a conversation about really about investing, but a lot of that conversation is coming off of TikTok from people that are selling life insurance as an investment.
Yeah. So it's being misled sometimes
It's
by
being
the
misled.
information that we're receiving.
Yep.
And
And
I can see what you're saying. Like once, if she even just committed to something she felt comfortable with, like $50, like you say, and then could see what that did with her investment, like how that accumulated and compounded, etc., then that could give her more courage to invest more. And so,
and empowerment.
Mhm,
Not so much courage, it's empowerment.
okay.
But if she went to and opened a GIC, she would never see any growth. And then you have to say, ooh, inflation has eroded away.
No doubt.
Oof. And
Yeah,
that's
I love how you take all those things into consideration and explain it really uh, thoroughly.
yeah.
It's much appreciated.
And like, I think I don't want to get into much of our conversation, but like cost of care as we age, that's a big consideration because we're into that beautiful, fabulous decade. So our thoughts and our plans kind of should change, should shift a little bit versus when we were 20 years old.
Totally.
And just as my thoughts of like aging parents, you're getting through the raising kids, I'm getting to the part of aging parent and saying, hey, did my mom set herself up with her guy to have her have longevity? Because I know that there's longevity in my mom's family. And because I was off in university, so, and I was actually a teenager, so I wasn't part of those conversations. And now I'm like, oh, I'm like,
especially now with all your knowledge, right?
Yep. And even before, like I became knowledgeable, like I just said, hey, and I hated those summers, Annie, when we were back these last couple of summers, with my mom saying, whew, I might have to go back and get a job. And I don't know if she was joking, but that's when the markets were really down. And my mom's guy, those, like the last couple of years, there was no hiding spot. Like when the feds were raising the interest rates, there was no hiding spot, and the markets were rocky. There was no hiding spot that in those years. And so as you're a retiree taking money out and you have no hiding spot.
Yeah, so true.
Yep. So you just have to think, like, as you go through life, your priorities will switch, and you have to be flexible enough to roll with those punches. And if Bernie and I didn't roll with the punches and we said, hey, we're going to be debt free, we would have been debt free with no money in retirement. But we had to be open to different ideas and different thoughts, kind of, and go from there. I'll share a little bit of our debt story. We had my student loan, there's a credit card, and like a line of credit. And we were paying money to everything, like extra money, like to every three, like all those three things, we're getting extra money each month because we were so, especially my student loans. It wasn't until our money guy came into our life and said, hey, why don't you just focus all your extra money to one debt and get rid of it first? and at first I had a hard time getting my head wrapped around it. And he said it's like you have monkeys in the zoo and you're giving every single one extra peanuts. Just give one monkey all the extra peanuts and it'll be happy and it'll go away.
Yeah,
And then you can focus on the next monkey.
it's a good idea.
Yep. And that's something, I mean, that's part of the technology that I have access to, because who knows, like, which one do you start with? Well, it was easy enough for me. I was earning Canadian dollars and paying US dollars on the student loan debt. So that's something that I can sit down with via Zoom, share my screen and say, hey, what do you have going on with your debt?
Interesting.
And then create that the most efficient way to get rid of those debts. And then free up extra money to go fund your retirement.
Awesome.
Yep.
I'll do that.
On our next Zoom.
Yeah, exactly. Well, we're coming up to an hour now, and this has been an amazing and fascinating conversation that's just flown by for me. Before I let you go, is there anything that we've missed or anything that you'd like to say before we go? Or do you think we covered it all?
We covered a lot, not all of it, but as you can tell, it's something I'm passionate about. And it's passion about empowering people to make informed choices.
I'm Annie Temple, the erotic entrepreneur. If you enjoyed this podcast, please like, share, and subscribe. Thank you very much.